Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody is not aware of this is a journey of investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video we're going to be looking at ticker symbol HIMS, and after a strong earnings beat we're going to be asking the question, is this now a good time to buy the dip? We're also going to be looking at MMTLP and looking back at the S1 that was refused by the SEC and looking at potential reasons and implications for this. So before we get started, let's have a look at what's happening in the market. So first of all, from Bloomberg we can see the stocks are getting hit quite hard and economic jitters are spurring a bond rally. US consumer confidence has declined and it is now the biggest decline since August 2021. So not good news for the overall markets, and we can see here from Reuters the Nasdaq has been touching a 1 month low after weak consumer sentiment data. So if we have a look at the heat map here, we can see the tech sector has been hit the hardest. Apple is probably the one stock that is doing slightly better, but the one that is doing well overall in this stock market right now is consumer defensive sector, and we can see Tesla is down significantly. Amazon is also down amongst many others. So if we look at the fear and greed index, we can see right now the market has just touched extreme fear, so which basically means not many people will be buying. So if we look at the Magnificent Seven, that is now moved into correction territory and it is down 10% off its most recent all-time high, so not great overall. And if we look specifically at Tesla from Market Watch, we can see the stock has pushed below $1 trillion in terms of the valuation, and that is the first time in 3 months, and from the recent high Tesla is down close to 40%, so not good news there. Let's start by having a look at ticker symbol HIMS, also known as Hims and Hers Health, and they did recently report earnings and shared live in the Discord. We can see here the sell-off has continued and the stock was immediately down 18% as a potential weight loss drug restrictions have cast doubt on an optimistic forecast that we saw in the earnings. So let's have a look at the chart right now for today. Again, a down staggering 22.59%, currently trading at time of editing at $39.72. But if we have a look at the 5-day chart, it's down over 32%, and we can see earlier on Wednesday it was trading at just in excess of $72.34, so quite a significant move down. So let's have a look at the news shared here in CNBC, and we can see the stock is down significantly over concerns on this weight loss drug and the margins. And we can see here the company reported in terms of the earnings, reported $481 million in revenue, and that was up 95% from the $246.6 million during the same year. So normally that would lead to a huge spike in the share price, but let's have a look at the earnings. In terms of key highlights, so revenue we can see up 95% year on year. Net income as now is also up. We can see $26 million for the fourth quarter of 2023. We can also see here in terms of operating cash flow, that's $86 million. Free cash flow at $60 million is up a staggering 452% year on year, and the number of subscribers is also up 45% at 2.2 million. So an amazing beat there in terms of the earnings, and also the best quarter ever for HIMS. So let's have a look at a summary. So the company reported its quarter 4 revenue jumped 95% compared to the similar previous period, and we're looking at $481 million versus the analyst average of $471 million. The cash flow has also gone up, $59.5 million in the fourth quarter, up from $10.8 million in the fourth quarter of 2023. So let's have a look at some of the analysts, and we can see here nearly all of the analysts have this as a positive stock, and we can see the price targets are significantly higher, $40, $61, $60, $85, and I think the lowest one there being $21. So overall quite positive there. So let's finish up by having a look at the chart and the moving averages. If we have a look at the chart here for HIMS in terms of the 50-day moving average, I think a run look back up to over $50 is potential, and obviously we will need some good news on that, but I think for now the stock will need to hold above the $36 mark. Let's have a look at MMTLP and news from NextBridge with regard to receiving further SEC comments and the S1 not being approved again. So there was a press release earlier, so we're going to look at a summary of that and reactions, and we can see here in the press release the company has stated they are disappointed to receive another round of SEC comments with regard to the annual report on Form 10K for the 2023 fiscal year, and this is going to further delay the effectiveness of the registration statement S1 offered to the public with regard to the 40 million shares of common stock that the company were hoping to do, and also that would have helped them to raise additional much needed capital. So they also go on to state that they understood that they addressed all the SEC comments in the registration statement planned and proceeded to file with regard to the final amendment, and this was to include pricing information in terms of the offering. However, before the company could file the amendment, the SEC delivered the comments to the 2023 10K. This meant they could not file the final pricing amendment to the registration statement until the comments were resolved. So it sounds like to me these comments have just been added on as extra. They could have also been added on in a previous feedback from the SEC, but it looks like they're adding on these comments in dribs and drabs. So the company go on to say there have been 5 rounds of submittals related to the statement, all costing the company, i.e. NextBridge Hydrocarbons, tens of thousands of dollars to address, because obviously there are accountancy fees which would be quite significant in this, and the SEC has taken the position that they should not have restated the 2022 audited financial statements that impaired the balance sheet value of the Oro Grande property down to 0, and they were included in the 2023 10K filed in July 2024. So the SEC stated that they should impair the value as of October of 2024 when they learned that the university lands were not extended in terms of the Oro Grande agreement. So it looks like they're using that news to chip in an additional delay. So the company has stated they would be required to amend 2 annual reports on the Form 10K, 6 quarterly reports on the Form 10Q, and these are from the previous 2 years. And they are stating here the process is likely to take an enormous amount of time and additional months and additional costs, potentially several $100,000 above what they have already spent. So it looks like Greg McCabe is certainly not happy. So these are the points he made. He stated here they've already spent 2 years attempting to file the S1 without success, and they needed to do that to raise the additional capital, and they've only obviously had this been involved in this arduous process to be financially damaging. They found it to be, both for the company and the 65,000 plus shareholders, including ourselves, and they have suggested that a more efficient solution would be simply adding a footnote, but it looks like the SEC have not agreed to that. So all prior communications, I think this is interesting, with the SEC related to the 2023 10K, including the comment letters and the company's responses, are going to be available to download on their website in the near future. So we do look forward to that, because I think that could be quite insightful in terms of how the SEC are responding with regard to NextBridge. And they stated here, in addition to the time and expense of restatements, the company and its shareholders will also suffer detrimental opportunity costs. So obviously many examples of that, including the opportunity to invest in using cash to invest in other stocks, which is now denied. So this is also going to further delay providing shares to firms who privately requested them to ledger to correct the ledger imbalances. And remember, Greg McCabe stated he was approached by a number of these significant firms. I think they were overseas, but he's not able to do that because of the lack of approval. And finally, the company will pivot and intensify the efforts to obtain clarity on this inexcusable imbalance, which remains to this day, an unsettled injustice to our loyal shareholders. So let's have a look at some reactions. So first of all, Junk Savvy has stated the SEC requests the issuer falsify and bury data, setting up a Sarbanes-Oxley Act violation. And that really isn't what the MMTLP Army does. We don't use our shovels to bury evidence, we use them to expose. Gandalf has stated here sarcastically, the SEC to McCabe, please kindly remove all your data regarding MMTLP, and I think there's a lot of truth in there. So let's have a look at some posts in terms of a summary from Trevor, who stated here, summarising that basically the SEC's actions appears to be a deliberate stalling tactic to block them from raising capital, weaken them financially, reduce the legal liability for institutions that were involved in MMTLP, i.e. the shorting, ensure Nextbridge never has enough financial power to challenge the system. So that looks like the SEC is involved in that. And then finally, I'm going to finish off by having a quick review of previous week's weekly watch list. And one of the stocks that we called out, which had great momentum, was STAI. That was up over 129% on Tuesday, and also up over 55% on the week. So congratulations to everybody who got in our best call, STAI. We also called out WGS, up over 24%. Remember, there was no trading on Monday. SMCI, we have been keeping an eye on in the previous week as well as this week. There has been pullbacks right now, but previous week that was up over 28%. Baba, I know the call that we had in terms of earnings, I think doing reasonably well today as well, up over 13%. And finally, thank you very much for watching. Please stay tuned.